Good morning to those of you who have joined PIDC on this morning. Thank you and welcome on Tuesday morning, March 8th. It is 10:25. We are scheduled to begin in 5 minutes at 10:30. Thank you for your patience. We will go through a few of these slides. To give you information on what's happening with PIDC. During this webinar, we encourage you to interact with our speaker. You can use the chat function and type in your message, your question, or your comment. Or you can use the raise hand function and we will unmute you and let you ask your question live. Also, if you want to be anonymous in your question, please use the Q&A function and we will be monitoring the Q&A function throughout today's session. Upcoming events here at PIDC. This is the first of a three-part series with the Small Business Administration. And so on today, we're going to be talking about surety bond guarantee programs for small businesses. And then on March 15th, next Tuesday, same time, we're going to talk about understanding the federal Hub Zone program and its value to contracting. Hub Zone is the historically underutilized businesses. And we hear a lot about Hub Zones, but we don't tend to know. And one of the statistics that we've learned is that utilization of the Hub Zone program in our local area is very low. And so we encourage you, if you're looking for an advantage in federal contracting, that you join us on next Tuesday for part 2 as we talk about understanding federal Hub Zone programs. And then wrapping up this 3-part series will be on March 22nd, getting started with federal government contracting. So many companies tend to just focus on what happens at the local level with municipal contracting or state finance. I keep wanting to say financing, state contracting. But we encourage you to start to look into the opportunities to do business with the federal government. The federal government buys just about everything. If you can imagine, I remember when I started with the city of Philadelphia and learning about all of the products and services of the city. Food, at the time, they were buying food, they were buying cigarettes, they were buying condoms. So you think about the penal system. There are prisons at the local level, prisons at the state level, prisons at the federal level, and people, prisoners, have to be serviced. They have to wear clothes, they have to eat. So all of those things. So don't underestimate what contracting opportunities are available with federal contracting. Federal contracting is a wonderful opportunity to grow your business, but it is a process. And so we encourage you to join us on March 22nd to learn about contracting with the federal government. Also, we are a firm believer of business education and the value that it brings to you, the business owner. Financing is good, access to capital is good, but what makes all of that work is understanding numbers, understanding how to make the financing work for you, understanding processes and efficiencies. And so we are always big on education. So we are partnering with the Community College of Philadelphia for a few information sessions that are upcoming. March 23rd, we're going to partner with the Power of Your Business, and we're going to explain that program to you. We are offering it twice. And so if you miss it the first time, don't worry, we're going to offer it again before the application deadline, and that is March 23rd. We're going to offer it again on April 5th. And as we continue in our business education commitment, on April 12th, we are hosting an information session for the Goldman Sachs 10,000 Small Businesses program. And this will be before the application deadline, which is May 24th. And so we will have information then. All of this information is on the PIDC website. Stay in touch with us through our monthly newsletter. Just go to our website where you can sign up. You can also follow us on social media, all of the social media platforms where you will hear or you will see and read about everything PIDC. And if you missed anything in today's webinar or any previous webinar, and you just want to review it at your leisure, please go to our website and look for the replays of our webinars. We still have, we're slowly coming out of this COVID pandemic, but we still have COVID resources. So again, once you are on the PIDC website, please look for those COVID resources and funding opportunities. Funding opportunities are still available, so we want to make sure that you are aware of those and taking advantage of them. And I think that is it. It is 10:31. So thank you again for those of you who have joined us on today. I am going to introduce our speaker. Many of you know it has been a pleasure for PIDC, especially during this pandemic, to partner with the Small Business Administration. You know, it is a national organization, but we're fortunate to have a local office right here in the Philadelphia area in King of Prussia. So today we are continuing that partnership with the SBA, and we're talking about Surety Bond Guarantee Program for small businesses. And our presenter on today is Tamara Murray. Tamara's the underwriting and marketing specialist for the SBA for the Guarantee Program. She's responsible for marketing and outreach to not only the small business community, but to the surety community, and underwriting, review, and approval of contract bond guarantee applications up to $10 million. She works closely with the bond agents, and I know we have one of our good partner organizations who's a bond agent who is on the call today, Ellen Nayland of Surety Bond Associates. So welcome, Nayland. Welcome, Ellen. We are glad to have you with us today. Tamara also works with the surety companies who provide over $6 billion in bond guarantees to small businesses on an annual basis. The marketing efforts by Tamara resulted in the publication of a professional article in the December 2014 issue of the Risk Management Association's journal called Minimizing Contractor Defaults. SBA surety bond guarantees can open doors to bonding. So Tamara is one of 3 subject matter experts on behalf of the SBA across the country. But technically she's the only one right now. We were just having this conversation before we started. We are especially fortunate to have Tamara with us this morning. Tamara is coming from Texas. She is in Corpus Christi, Texas this morning. So one of the benefits of the virtual environment is that we can take advantage of subject matter experts no matter where they are. And so with that, I'm going to turn this over to Tamara, and remember how you can interact with us through the chat. We're monitoring the chat. You can use the raise hand function and we will unmute your mic. Or if you want to remain anonymous, use the Q&A function and we will answer your questions. So with that, I'm going to turn my mic off. I'm going to turn my video off, and Tamara, take it away. Thank you so much. And welcome to Philadelphia and welcome to PIDC.
Thank you, Marla. It's such a pleasure to be here. What a fabulous introduction. Welcome, everyone. Welcome, Ellen. As Marla mentioned, it seems like we have an SBA authorized bond agent joining us today. I know Ellen is very proactive with the program and works closely with PIDC, who's also proactive with the SBG program. That's what I call it for shorts. You know, we've got a lot of acronyms here in the federal government that we use. So you'll probably hear me during the course of this presentation refer to the Surety Bond Guarantee Program as the SBG program. It's just a little bit easier for me to say. So yeah, we've got some great partnerships here, some great information for you. I really appreciate you taking time out of your day to join PIDC and myself with SBA for this webinar on contract bonds and SBA's Surety Bond Guarantee Program. As Marla mentioned, I am more than welcome to hear your questions, your challenges, your comments. If you would like to, feel free to put those in the chat and the Q&A. We'll try to monitor those as we go along, but we will have an open opportunity for Q&A once I wrap up the presentation. So if you have questions, go ahead and type those into the chat. If we can answer those along the way, we will. And if not, I'll be happy to take your questions at the conclusion of my presentation. We'll also be sending you, I'll also be sharing my contact information with you as we wrap up. So if you would prefer to ask your questions or have a discussion in a more private setting, please feel free to reach out to me. I'll give you my phone number and my email address so you can reach out to me directly if you would rather have a more private conversation about your particular challenges related to bonding. And we know from experience that there are a lot. So I'm going to turn my video off while I am presenting. I'll turn that back on as we move into Q&A, just to keep the distractions down. So, really what my hope is today is to provide you with an overview of contract bonds and the advantages of using SBA's Surety Bond Guarantee Program. I hope that this information will help you understand bonding for government and other contracts. A lot of focus right now is on government contracting. As Marla mentioned, the PIDC's got a class coming up on working with the federal government. There's going to be a lot of projects coming through the states and filtering down into the states and the cities across the country under the infrastructure bill, the bipartisan infrastructure law, as we're calling it. And there are going to be some opportunities to bond some projects under that bipartisan infrastructure law. So I appreciate that you're taking time out of your day today to get prepared for that, so that, when you do see a project that you're interested in bidding, you'll be all set and ready to go. So SBA's Surety Bond Guarantee Program has been opening doors to bonding for small businesses since 1970. It's over 50 years. So we have a pretty good idea of, what the needs are of small businesses related to their contract bond challenges. So I'd like to start us off with a brief video overview of the SBG program, and then we'll dig a little bit deeper into the details and how you can gain access to SBA's bond guarantees.
Small businesses are a critical part of the U.S. economy, and through the SBA's Surety Bond Guarantee Program, we help small businesses at various stages. Emerging businesses that need contract surety bonds but may be new to bonding, as well as established businesses looking to increase their current bonding limits and capacity. For over 50 years, SBA's Surety Bond Guarantee Program has been a trusted program creating access, opportunity, and stability for thousands of small businesses needing surety bonds, as in more than $7 billion a year in contract bonds. If you own a small business in construction or service industry and require a contract surety bond, with SBA guaranteed bonds, your working capital requirements are lower and your bond capacity is increased. The result? You compete for larger contracts or build your business as a prime contractor. Who benefits when small businesses get access to surety bonds? We all do. With access to bonds and increased bonding limits, small businesses grow, and that growth has ripple effects, such as hiring employees from local communities and contributing to the national economy. Convenience, not hassle. The program has low barriers to entry. It's easy to use. The entire process is electronic, and you receive fast decisions within hours for smaller contracts and less than 2 days for large dollar contracts. Sound like a program for you? Reach out to your local SBA district office to learn more, or take the first step to apply for the program by connecting with a surety agent authorized to issue SBA guaranteed bonds. Find a surety partner at sba.gov/OSG. Because at SBA, we make small business our business.
All right, so that's the SBG program in a nutshell. Let's get a little bit deeper into the details of the SBG program. So a couple of terms you probably picked up on in that video. We talked a little bit about contract bonds and then surety bonds. Well, surety bonds is an umbrella term. So surety bonds refers to a lot of different bond types. License and permit bonds, court bonds, even customs bonds are surety bonds. Contract bonds are also surety bonds. And this is what we're going to be talking about today, because contract bonds are the bonds that we can guarantee here at SBA for small businesses. Now, the four types of contract surety bonds that are required typically from contractors are bid, performance, payment, and maintenance bonds. So the bid bond is an assurance to your project owner that you have already qualified for and will be able to provide the performance, payment, and maintenance bonds that they require in whatever combination to secure the contract once you've been awarded the job. So the bid bond assures the project owner that if they award the contract to you, you are going to be able to bond that contract. Then once that contract is awarded, the other three bonds come into play in different combinations depending on the requirements of the project owner. The performance bond assures the project owner that you're going to perform the contract. You're going to complete the contract in accordance with its terms and conditions. The payment bond assures your project owner that you're going to pay your bills on the project. So you are going to pay your subcontractors and your labor and material suppliers for their work on the project. And then the maintenance bond assures your project owner that you will maintain the workmanship and materials installed on the project for a period of time after the project is completed and accepted by the owner. Now, it's typically small businesses that are in vertical and horizontal construction that most often need these contract surety bonds to qualify for government and other contracts. But you may also find bond requirements on contracts for janitorial, mowing, and other services, contracts for supplying materials like doors and hardware, or even manufacturing contracts for materials like road signs and guardrails. As an example, the federal government requires bonds on construction contracts that are greater than $150,000, but the bond requirements on non-construction contracts vary at the discretion of the contracting officer. Other public and private project owners may also have their own bond requirements, perhaps even on smaller contract sizes. There may be a state out there in which you want to perform a state project, a public project. There are some states that have bond requirements as low as $50,000. So the takeaway here really is that these bond requirements vary from place to place and project to project. So it's important for you as a small business owner to be aware of any bond requirements on your projects as early as possible in the bid or negotiation process. Why is that so important? Well, if you don't already have bonding in place, or if your current bond limits aren't high enough to accommodate the project that you're looking at, you're going to need some time to apply for bonding or increase your bond limits. And you're going to have a limited amount of time to do that. If you're bidding on a project, there's a bid deadline. There's a date by which you have to submit your bid and your bid bond. If you are negotiating or being awarded a contract, you're probably going to have anywhere from 10 to maybe 30 days to provide the bonds once the contract is awarded to you. So you've got some time constraints there. Now, when it comes to these contract bonds, SBA guarantees bonds on all types of contracts and subcontracts up to $6.5 million, and on direct federal contracts up to $10 million. Those limits are per project, so we've got lots of capacity to help your small business grow. And small businesses sometimes don't realize that Even though we're a federal agency and a federal program, we actually provide bond guarantees on not just federal contracts, but all types of contracts and subcontracts up to that $6.5 million contract size. So we're not just here to support you on your public work or your government work. We're here to support you with all of your bond needs. To obtain bonding, your business will be evaluated by a surety company and by SBA if you need our guarantee in 3 areas, what we call the 3 C's of surety: capacity, capital, and character. Your bond limits will typically be based on this review, and you'll have a per project bond limit and a total bond program limits. There's 2 parts of bonding capacity that you should be familiar with as a small business. So let's look a little bit at that underwriting process. It typically starts with capacity, and capacity is basically your ability to complete the work. So the surety company is going to be looking at your past experience, the experience of the owners of your company and any key personnel that you've hired to support your day-to-day operations, and your business management practices. Now, in this area, it's really your experience, your past track record of completing projects that's going to determine your per project bond limit. So surety companies will typically provide bonds to businesses on projects that are about 2 times their largest job to date. So if you've successfully completed a $500,000 project and you qualify in all of the other areas, then your surety should be willing to look at bonding $1 million project for you. Once you've completed $1 million project, they should be willing to look at a $2 million bond for you. And so you slowly grow your bonding capacity, your single bond limit, until both you and your surety company are happy with the sizes of projects that you can bond. Next up is capital. This is your company's cash flow, profitability, and the quality of your financial statements. The working capital from your current business balance sheet is typically what determines your total bonding limit. So that second number of bonding capacity. So the more working capital and the more profitable you've been in your company, the more net worth you have, but primarily the more working capital you have in your company, the more bonding capacity you can typically obtain. Then last but not least, character includes a review of the personal credit history of the owners of your business, plus their business reputation. Now, good character is crucial to obtaining bonding, and it's even more important when you need to obtain an SBA bond guarantee. That's because typically when small businesses come to SBA for bond guarantee assistance, they're challenged in one or both of the other 2 areas, capacity or capital. So we really very heavily rely on the character, the drive, and the determination of our small business owners to successfully complete their projects despite any obstacles that they might encounter along the way. So character is very important to obtaining an SBA bond guarantee. Now, if you're new to the bonding process, you can pre-qualify with a surety company today, so you know your bond limits before you start bidding or negotiating for bonded contracts. So what happens with pre-qualification is, instead of applying for a bond with a surety company, you go through almost exactly the same underwriting process as you would if you were applying for a bond with the surety. But instead of coming out of the other side of the pre-qualification process with a bond, because you don't have a project yet, you come out the other side of the pre-qualification process knowing your bonding capacity and having your bonding relationship set up and ready to go, so that when you do need a bond, you're already well ahead of the curve. And you simply just need to request the bond from your agent and your surety company. I encourage you to begin the pre-qualification process today if you don't already have bonding in place. Don't wait until you have a project with a bond requirement that you're interested in. With tight bid deadlines and strong competition, you need to be prepared. And so if that bid or that project comes across your desk and there's a bond requirement and you're not ready, that's going to create some additional stress for you as a small business owner. So take the time now to get yourself set up and pre-qualified for bonding so that you're ready to go when that really attractive project comes along that you're interested in. But what if your business is new and you've never completed a project? How do you get qualified for bonding if you don't have that experience? What if you have credit issues or very little capital? Small businesses seems always challenged to have enough capital, enough cash flow to be able to maintain their operations and be successful. What if you already have a bond program, but you want higher bond limits and your surety is not willing to increase your bond limits? Well, that's where the SBG program comes in. We help small businesses facing bonding challenges like these by creating access to contract bonding, increasing bonding capacity, and eliminating the barriers that sometimes prevent small businesses from competing with larger firms who honestly don't have any difficulty obtaining the bonding capacity that they need. So what SBA's bond guarantee does is it helps to level the playing field for small businesses. And we help level that playing field for you by partnering with bond agents and surety companies nationwide. We guarantee 80 or 90% of the bond's value against loss to the surety company in case of a default. That means that your surety company only risks 10 to 20% of the contract value instead of 100% because they have that 80 or 90% guarantee from SBA to rely on if there is a contract default. So what does SBA's guarantee to the surety company do for you as the small business owner? Well, if your business is having trouble obtaining bonding, if you need higher bond limits, or if you've been posting collateral or paying for funds control to support your bond program, an SBA bond guarantee could be a good solution for you. We help small businesses qualify for bonding with about half as much capital as the surety company would normally require. We also count the working capital that small businesses have available in a working capital bank line of credit, if they have one, to help increase your bonding limits. So while many surety companies require businesses to have about 10% of the contract value in working capital to provide the bond, sureties who have SBA's guarantee will often consider 5% in working capital to be sufficient. That's really what allows SBA's surety partners to give small businesses up to twice as much bonding capacity with the same amount of capital. So with the capital that you have, in combination with SBA's bond guarantees, you may be able to double your bonding capacity without making any changes to your current financial condition. Now, let's talk about that bank line of credit. SBA counts the unused portion of a working capital bank line of credit as working capital that's available to your business to help increase your bonding capacity. So for example, if you have a $50,000 bank line of credit with $25,000 available for use, that's an additional $25,000 in working capital that counts in the SBG program toward your total working capital, so we can work with our surety partners to help increase your bonding capacity even further. That's twice as much potential bonding capacity just by virtue of having SBA guarantees on all of your bonded projects. And your available bank line of credit counts toward your total working capital if you have a working capital bank line. These advantages are available only to small businesses in SBA's Surety Bond Guarantee Program. Now, we can also guarantee bonds for larger projects, even if you only have internal financial statements. Sometimes small businesses are unable to obtain bonding because they don't have CPA prepared financials. So we work to make that a little bit easier as well. The financial statement requirement for an SBA bond guarantee is based on the size of the job that you're asking us to guarantee. For example, we accept internal business financial statements for many contracts up to $2 million in size. And our CPA prepared financial statement requirements don't kick in until you're looking at bond guarantees on projects over $2 million in size in most cases. So if you're performing some smaller projects below $1 or $2 million, you may be able to obtain the bonding that you need just with your own internally prepared financial statements before you grow to the point where you need to have a CPA involved in preparing your financials. So to that end, we guarantee over $7 billion a year in contract bonds for small businesses. And last year, we helped over 1,600 small businesses obtain the contract bonds that they needed to be successful. Now, I'd like to take a moment to share one of my favorite small business success stories with you. Vera Hall is a small business owner in Mississippi who came to SBA a few years ago and learned firsthand how SBA guaranteed bonds can help a small business grow. So let's hear how the SBG program helped Vera in her own words.
We were bidding a security camera contract with a local college or university, may I say. And at the time, I was dealing with another surety, and I'm not going to name them. And so that surety said, what are you going to do? What is your estimate? And I said, the estimate of that project is going to be about $650,000. Oh, that's too much. You need to stay in the 250. And so the insurance company that I was dealing with had already started reaching out to SBA. So I said to them, I need to bid on this project. It's a woman-on set aside. They have a DBE set aside, and I really need to bid on this because no one else is going to bid on it. And so they reached out to SBA that morning and asked them where were they on the process with my application, and they told them, oh, well, yeah, we can bond that for her, the $650,000, and that's what happened. That morning of the bid opening, I went in with an SBA surety bid bond to bid that project, and I was the only contractor to bid that project and was awarded that project as well. So it has been a blessing, and it has totally helped in my business to grow and to enhance where it needs to be. So that's one of my stories.
So did you catch that? The SBG program helped Vera obtain a bond at more than double the limit her surety had set for her, and she was awarded the contract as the sole bidder. It's been a few years, fast forward, and Vera's company is now bonding multi-million-dollar contracts on her own without SBA support. So she started out with a $650,000 SBA bond guarantee for that first project. And within just a few years, she had grown her company and her bonding capacity to the point where she no longer needed SBA support. And that's what we hope will happen for your small business, that you will utilize the SBG program until you no longer need that helping hand that our guarantee provides, and you can continue to grow your business and maintain the bonding capacity that you need without SBA's bond guarantees. Now, at this point, you're probably wondering how long it will take to get a bond or to pre-qualify for bonding capacity. Well, it's going to take the surety company several days to review your information and either determine your bonding capacity if you're pre-qualifying or approve your first bond if you're actually applying for a bond. So that's going to take several days. Then, once you need a bid, performance, or payment bond, your bond agent will help you apply for SBA's guarantee, and that can take an additional few days. The SBG program approves bond guarantees in about 2 days, and we offer a streamlined, quick application that requires less paperwork and allows us to approve a guarantee within 24 hours on bonds that are $400,000 and smaller. So if you're looking to get pre-qualified and you don't have a project in mind, you can expect that the underwriting process, the pre-qualification process, is going to take several days. If you do have a bond need and you're going to need SBA's guarantee, the entire process will probably take pretty close to a week. Now, to qualify for the SBG program, your business must be small by SBA's definition. And if you'd like, you can visit our website and determine whether or not your business is small. You can go to sba.gov/size, but you know what? You don't even need to know if you're a small business. That is the first thing that your bond agent will check, is your eligibility for the SBG program if you're interested in SBA's bond guarantees. In addition to being small, your business and all owners must be current on public debts, taxes, and repayment agreements, and you must pass the underwriting standards set by the Surety and the SBA. So that's that 3 C's underwriting process that we talked about just a few minutes ago. You must possess good character. We talked about how important that is, not only to the bonding process, but to obtaining an SBA bond guarantee. And you must need a bond that you are unable to obtain elsewhere with reasonable terms. Your company must be a US-based for-profit business with legal resident owners. You must be eligible to do business with the federal government and not be involved in a current bankruptcy proceeding. Now let's talk about the costs associated with bonding and with SBA's guarantee. SBA does not charge a fee for a bid bond guarantee. So if you remember back to the definition of a bid bond, you are competing for that job. You have not been awarded the project. So you don't really want to be incurring any additional fees just to bid on a project. So we're not going to charge you a fee for a bid bond guarantee, but once you're awarded a contract and you need a performance or payment bond, there is a contractor's fee of 0.6% of the contract amount that you will pay to SBA for the bond guarantee. We also want to make you aware of the surety's premium. This is a separate amount that you will pay to the surety company for providing your bonds. Now, unlike SBA's contractor's fee, which is fixed at 0.6%, the surety's premium varies depending on several factors, including the type of work that you perform and where the job is located. I can tell you that surety premiums typically fall between about 1% and 3% of the contract value. But the important takeaway here is that you should know your surety premium rate in each of the states where you perform work. Once you can calculate your total bond cost, your surety's premium rate plus SBA's 0.6% if you're using our program, then you can calculate your total bond cost and you can include it on your bonded projects so you can be reimbursed by your project owner. If your contract requires bonds, your total bond cost is an allowable billable job cost. So you want to bill for it and be reimbursed for it so that it doesn't come out of your profits on the project. Now, the good news is that many of SBA's surety partners reduce their normal premium rates to compensate for the extra 0.6% that you'll be paying to SBA for the bond guarantee so that you can remain competitive against other businesses who aren't using SBA's bond guarantee program. As a matter of fact, the average total bond cost for small businesses in the SBG program is about 2.25%. You have access to our 3 SBG program area offices for assistance and support, and you can contact us if you have any questions. As I mentioned, I'll be sharing my contact information a little bit more directly as we begin to wrap up and move into Q&A. But the PIDC and small businesses in Pennsylvania, Philadelphia, really all over New York, all over the East Coast, are serviced by our Washington, D.C. area office. So I've included that information here so that if you would like, you can reach out to Ernest Knott, the area director for the SBG program in our Washington, D.C. office. Now, it's really our network of surety partners that help us give small businesses the opportunity to get the bonding they need to compete for larger contracts or bid on their own instead of as a subcontractor. SBA authorized bond agents have access to more than 40 surety companies providing bonds to small businesses. Most bond agents represent several SBA surety companies and non-SBA surety companies so that they can work with you to find you the best surety company to meet your needs. So when it comes to bonding, that relationship is where an agent, a bond agent, represents multiple different surety companies so that they can work with you to find you the best surety company to meet your needs. If you need access to SBA's bond guarantee, then your agent will be looking at SBA's surety partners to determine which one is going to be the best one for you. And then SBA's guarantee runs to that surety partner on each project that the surety agrees to bond for your business. Now you can get started today. Here again, just like with pre-qualifying, the sooner the better. You can get started today by visiting our website, sba.gov/OSG, to find an SBA authorized bond agent in your area. There are going to be several to choose from, regardless of what state you're located in. Even if you're joining us from outside Pennsylvania, we have numerous bond agents in every state that we partner with. So what I recommend is that you call a few and ask some questions to get to know the agent and the services they provide a little bit better. A professional bond agent goes beyond providing you with a bond. They can refer you to a qualified CPA in your area and even create a roadmap to help you get more bonding capacity or qualify for your first contract bond. So your bond agent is a part of your professional team, your small business's professional team, just like your CPA or your attorney. And it is their job to ensure that you meet the underwriting requirements for surety credit. They will help you do that so that even if you can't, for some reason, qualify for bonding today, they can lay out the steps that you need to take to be able to qualify for bonding a little bit later on down the road. Now, I will be sharing an additional resource with you in the chat as we begin to move into Q&A. SuretyLearn.org is a great website that I'll put into the chat that has some really good information, not just in general about bonding, but a great article about how to qualify your surety bond agent. So there's some good questions there that you can ask several bond agents when you are looking for the right bond agent for your small business. Once you choose your agent, they will ask you to provide them with the information and SBA forms they will need to get started with a surety company and your first SBA bond guarantee. When you work with an agent who participates in the SBG program, you have a chance to grow your business by competing for more contracts. You can only access SBA's bond guarantee through an authorized bond agent and surety company. So what can we do to help you today? Please feel free to enter your questions into the chat. Again, here is my contact information. As I mentioned when we started, you are more than welcome to reach out to me offline outside of today's event. You can give me a call, send me an email. I would be happy to talk to you in a more private setting about your questions or your challenges related to bonding and the SBG program if you would like that. So please don't hesitate to reach out to me after we wrap up today if you would rather have a private conversation, and I'll be happy to discuss any questions or concerns that you might have. That concludes the presentation portion of today's event. Marla, I will just say thank you so much again for having me here today. Thank you all for taking the time to listen and learn a little bit more about bonding and SBA's Surety Bond Guarantee Program. I'm going to get those additional resources together and turn my video on. Marla, I will turn it back over to you so we can handle Q&A.
Great. Tamara, this is outstanding, especially to be able to hear the live testimonies from businesses that were getting challenges, and all of a sudden, the day of the bid, how about that? The day of the bid, they got what they needed. And look what that has done in terms of the growth of the business. We want to make sure that everyone on this call knows, understands about the value that the SBA brings in all of its products and services. Again, we are so fortunate to have a local office, but we're fortunate to be able to have the expertise of Tamara, who has given you all of her information. She's given you, and we put that in the chat also, of the area director for this portion of the country, 3 sections of the country, and we are on the East Coast. So we want to make sure that any questions that you have the appropriate persons. Also, I put in the chat earlier that we're fortunate to have Solomon Wheeler on this call today. Also, Solomon is the manager for the Harrisburg office. So I want to invite Solomon, just make a few remarks. Solomon, are you still on the call with us? No, I see he's not on the call, but he left his information in the chat. Any questions that anyone has? I will say I would be remiss if I also did not allow our good partner, Ellen Nalen of Surety Bond Associates. We have been working with Ellen for, I don't even want to tell you the number of years that we've had the opportunity to work with Ellen. She has done a remarkable job in Philadelphia and the region in helping small businesses obtain the bonding that they need. So from Surety Bond Associates, she is a broker, but she's not the only broker in the area. It's just she's the one that we've had the most success with. So Ellen, I just want to give you a chance to say hello to our participants.
Good morning, everyone. I'm Ellen Nalen, owner of Surety Bond Associates. We're a surety bond agency here in the Philadelphia suburbs. We've been in business now a little bit over 20 years and originally started out writing SBA surety bond guaranteed bonds, and we haven't looked back. The SBA has been an incredible partner both for us and many of our clients, and we have access to a number of the surety companies that participate in the SBA program. I'd welcome an opportunity to work with any of you folks, and I've left my contact information in the chat. And thank you, Marla, for also being a wonderful partner for Surety Bond Associates. It really does take a village to help these smaller firms be successful, and the SBA and PIDC are probably the 2 best resources in the Philadelphia marketplace to do that. So thanks for giving me a chance to say hello.
Great, thank you, Ellen. We want to make sure, are there any questions? Is there any portion of today's presentation that you're not quite clear on? I know there are always questions. There is no shame in asking a question. But if you're a little shy, then just put your question in the Q&A and we'll make sure that we get it. But we've got the expert here and we don't want you to miss this opportunity. Again, Tamara is one of 3 people in the country that do this work. And right now, she is the only one until the SBA replaces her other colleagues who are no longer doing this work. So we are extremely fortunate to be able to have Tamara with us today.
Marla, I did see one question about student loan debt.
Sure.
There was a question in the chat, does student loan debt count as public debt? It does count as public debt if it is a federally backed student loan. So one of the things that we do when we are working with small businesses to who are applying for SBA's bond guarantee is, so we check the federal do not pay portal. So if you have a federally backed student loan debt that's in arrearage, that is going to show up on the do not pay portal, and it will prevent us from providing bond guarantees to your small business unless you have entered into a repayment agreement and you're current on the payments in that repayment agreement. So we want to make sure that all of our small businesses are current on all of their federal debts, essentially.
Great. We do have another question. If you could please explain again how the SBG fees are effectively covered and reimbursed.
Yes, so it's not just the fee for SBA's bond guarantee, but your total bond cost. So, you know, when you're performing a bonded project, when your project owner requires bonds on that job, your total bond cost is an allowable billable job cost. You want to make sure that you include that in your bid estimate and in your first pay request to your project owner, because that's a job cost. You are being asked to bond that project, and that's a job cost. So you want to make sure that you know what your surety premium rate is in each of the states where you work, plus the 0.6% for the SBA guarantee if you're using our program, so that you can calculate your total bond costs and bill for that. You want to make sure that you get reimbursed for that. Hopefully that answered that question.
Will today's presentation be available? Will we be able to access the slides? And let me say, even if we're not able to access the slides, you can access the replay.
Yeah.
So we have the replay on PIDC's website. So if there are other questions that you have, anything that you don't understand, please, please, please make sure you are going to our website to get the replays. And I will put the information on the replays in the chat.
And thank you, Marla. Thank you, Ellen. I didn't have to put all that stuff in the chat because it seems like every time I mentioned something, you dropped it right in there for me. So thank you for that.
Sure. And so one of the things was Surety Learn. So make sure everyone on this call is going back to Surety Learn. I just looked at it on the website. So you're going to get a lot of information. Again, we are so fortunate to have Tamara here, one of 3 experts across the entire country for the SBA. So please, please, please take advantage of her now. But she was kind enough also to give us information on how you can contact her directly. Thank you for the comments in the chat. It is 11:18 technically. We have 12 more minutes, but I don't want to hold us unnecessarily. So if there are no more questions, comments, either PIDC or Tamara, let me make sure I put my contact information in the chat also. I am Marla Hamilton, and if you have any questions about the presentation today or any upcoming presentations, if you have any questions about financing, because financing is so important to this process. I know Ellen offers opportunities for webinars. We have often partnered in webinars to make sure you're getting all of the information that you need to get yourself prepared. If you are a PIDC client, then we work directly with you to not only make sure you have the correct documentation, But when it comes time to get to that lender, to get that line of credit that is so critical, we also help you there. So with that, if there's nothing else, I do want to get that replay. Here it is. Okay, there are our replays. So with that, we're going to sign off. It's 11:20 here in Philadelphia and windy, and it is 10:20 and probably beautiful in Corpus Christi. And so thank you, Tamara. Thank you, Ellen. And thank you, everyone, for joining us. Please make sure you register for part 2 of this 3-part series. It will be next Tuesday at the same time at 10:30 Eastern Standard Time. I think by next week we will be on daylight savings time. So please make sure you get those times correct. But part 2, we're going to talk about hub zones, historically underutilized business zones. And as I mentioned early on, we do have statistics that businesses in this local area are not taking advantage of the contract advantages that come along with being located in and having employees in a hub zone. I will guarantee you there are people on this call who are pursuing federal contracts that are already located in hub zones here in Philadelphia, and you just don't know it. And so you are missing opportunities to get a competitive edge in winning those awards. So please sign up for part 2. And then part 3, we're going to walk you through how you get started in federal contracting. The United States is a huge place. I have clients that are doing business in Puerto Rico, in Florida, in Texas, as well as doing business here in Philadelphia. So we want you to expand your thinking and see opportunities for your business to go beyond just the Philadelphia and the 5-county area. So thank you with that. And we look forward to seeing you again on next Tuesday. Tamara, stay well in Texas, and Ellen, stay well in Philadelphia. Thank you all.
Thank
Bye.
you, Marla. You too. Take care.
Bye-bye.
Bye.